Across your investing journey, one of the terms which you may hear quite a lot is leverage. However, many people do not know what this is, and many people don't know what a tool leverage can be. Over the course of this video, I'll be explaining leveraged investing for beginners. If you enjoy these educational videos, please make sure to leave a like and subscribe to the channel. So we'll jump in by first establishing what leverage investing essentially is, and it can be summed up as using borrowed money or financial instruments to amplify returns. So I think the concept of this may make sense when explained very simply. If you have only £100 or $100, if you make, for example, a 10% return, we'll keep the numbers very easy, right? A 10% return on £100 is not going to be very much. It's only going to be £10 or $10. If you borrow some money or use an instrument which gives you, for example, 10 times leverage, you will have 10 times the return power. The same 10% will garner you 10 times better of a result. And whether it is through borrowed finance or financial instruments, returns are greatly amplified. Common tools which people use to leverage include margin accounts, options, or leveraged ETFs. Now, one big drawback with leverage is that it amplifies both gains, true, and also potential for losses. And honestly, I think this is something which not enough people factor into their strategy, especially when they are beginning to learn about leverage. Because the concept of massive returns is a good thing, right? People like the sound of it. But in reality, whilst that can be the case, it's very easy to lose a lot of money as well. So how does leveraged investing work? Well, there's four simple steps which we've summed up here. Four simple steps, right? So the investor borrows capital or uses margin. Again, this can be borrowing money to amplify the returns, as we just said, or potentially even using a leveraged account. The intention of this is that you can buy or emulate having the control over more assets than is currently possible with your current cash. So if you're working with only 1,000 and you have a 10x leverage, you're now working with the same power as 10,000. The benefits of this is that if gains do come in, if things do go up, you will gain the same benefit as if you had had that 10,000. The major downside, which is absolutely worth considering though, is that losses are also magnified if things just don't work out. So if it does fall, you're going to be losing the same amount as you would be with that same 10,000. And I think this very clear example shows the potential risks with leveraged investing. So here are some examples of leveraged investing in a bit more detail. You've got margin trading, which is borrowing from a broker to trade more. I'm sure that one kind of makes sense. You've also got leveraged ETFs. Again, if something is leveraged at 2 times, 3 times, it gives you obviously double or triple the exposure to indexes. Then you've got options trading. These control large stock amounts with little money. So again, it does obviously encompass all of the same benefits and potential drawbacks. Now, of course, leverage does come with a number of advantages, and this is perhaps why it is so appealing to a lot of people. Some of these most notable ones could be argued to be higher potential returns. Like I say, it is easier, if you are successful, to make more with the same amount of money. It can also maximize efficiency of capital for similar reasons. And also, if you do know what you're doing, some very successful traders who are skilled, right? They can use less money than leverage and still make even more. So it can be beneficial. Now, where leverage is particularly useful is in short-term opportunities. For example, if you are a short-term trader, maybe a day trader or a swing trader, you have the opportunity where a stock can move up by only maybe 2, 3, 4, 5%, but in theory, it could be significantly beneficial to your portfolio, to your income, because of the amount of extra exposure which you have to the asset. Then we've got to talk about the risks, and again, this is something which I personally think often does get overlooked or isn't taken as seriously as it perhaps should be. Losses can actually exceed the initial investment in some circumstances. Like I say, let's just use a common and clear example. You have $1,000 or £1,000, right? You leverage at 10x, and then a stock goes up by 10%, right? You've made a relatively significant amount of money. But if the same stock goes down by 10%, in theory, you can lose all of your money straight away or very, very easily, because you're working with the same profit and loss margin as you would be with a 10,000 investment. So it can be very risky. Again, you can lose all of your money. In some circumstances, you can lose more than all of your money. You've got margin calls, which could enforce selling at a loss. You know, a lot of platforms, a lot of places do not allow you to go over 100% loss, but it means that if you get close to that margin, if the amount of money in your account is running low, positions may be forced to close, leaving you with a relatively or potentially catastrophic loss. So that is absolutely something to consider in this circumstance. Then you've got the high volatility risk. Some people may see this as a drawback or a benefit, but it's something to be aware of. Like I say, a move of maybe 1 to 10%, not necessarily too substantial by itself, but you factor in some leverage, and that can immediately be a relatively high risk. Now, leverage is oftentimes not suitable for beginners, but it is sold as something which beginners can use. In reality, it's a very easy way to lose a lot of your money if you do not have an appropriate strategy. So for beginners, it can be very challenging and it may not be the best strategy overall. So in conclusion, leveraged investing can boost profits, but it also can massively magnify risks. Leveraged investing in many instances is often best for advanced traders, the people who have learnt to manage their risk carefully and know how to deal with their capital to the best of their abilities. It makes sense to always research. If you're using leverage, do it cautiously and be aware of your circumstances and be aware of the consequences that it can have to your investment portfolio and your capital itself. But yeah, leverage is a super interesting tool. It's a super powerful tool as well when used correctly. I'd love to hear what you guys have to say on this in the comment section. I do hope you enjoyed this video. And again, let me know in the comments as well. Have you used leverage before? Is leverage a tool that you use to make money? Or is it something that you avoid? Let me know if you found this video useful as well. I do appreciate any feedback. Thank you so much for your time, guys. Again, if you did enjoy, please make sure to leave a like on the video. Please make sure to subscribe. It does help me out a lot. And hopefully, I'll see you soon in another update video. Thank you. Goodbye for now.